Hi, I'm Kevin Lee with the eMarketing Association. I'm also the co-founder of Did It, which is how most of you know me. And I have a nonprofit called Giving Forward, which is a cause marketing nonprofit. I have an opportunity today to be with Rachel Greenberg, who wears many hats relating to startups and to marketing. And as a result, she's the perfect guest for the eMarketing Association. So your LinkedIn shows you active in 4 things. I'm guessing there must be at least 3 or 4 others that just haven't made it onto the LinkedIn. So why don't you let us know who you are and what you do?
Definitely. So my LinkedIn would say something like ex-Wall Street banker turned startup consultant, founder, entrepreneur type of thing. That's accurate. I come from a Wall Street background and I left to build and co-found some startups. And then since then, I have been running a few companies that are in the e-learning and ed tech space. And then I also work with a lot of other founders. I've worked with over 500 startups in just the past year and a half or so. And one of my companies that is more, I would say that I'm better known for is Beatable, which is almost like bringing entrepreneurship to the youth. So it's kind of like a youth accelerator. We created about 500, I think, entrepreneurs that are teens during the pandemic, which is like a cool thing. So yeah, that's the main thing. And then I also am working on a few companies that have not made the LinkedIn, but they're in, stealth mode, more in the media and data space. That's kind of a good way to put it.
Cool. Well, it doesn't sound like you sleep. I thought I was busy, and I only have sort of 3 things typically on my plate. So it's great to hear that you're busy. A lot of what you're working on is startups and helping startups with funding, as well as helping them prioritize their marketing. We've got a bunch of startups that's clients that Did It, and one of the conversations we often have with them is this sort of prioritizing how much to hit the gas on marketing when maybe the product isn't quite ready yet, right? But they want the feedback. They want to get real live users in there. They want to, let their agile coding be paired with agile marketing, right? And so, deciding how hard to hit the gas early on, if you do get a funding round, right, where all of a sudden there's cash in the bank. Now, how do you advise the companies you're involved in to sort of make that decision? Because if it's too early, you could get some negative feedback, right? And it could even show up sort of permanently in the social media channels. So how do you advise people think about that?
Yeah, definitely. It's a good question. Even though I come from a finance background and I obviously see the validity in fundraising, I don't like to push fundraising too early. Personally, I've had a lot of opportunities to take on venture capital and I have not, just because I don't think you always need it. And I think if you are planning on using funds for product development, that is one thing. If you're planning on using them for marketing, that's another. And if you're planning on using them to test a concept, that maybe is something you should do before you go raise that funding, in my opinion. So I think it's a hard balance between when do we get the product to perfection and user ready. I think one simple solution, which I have done and I would advocate and I would do again, and I am doing again with new businesses, is for your first round of customers, I just don't believe you should go out into the market with your full price and treat it like this is our launch. I really believe in beta testing and soft launches, beta launches, focus groups. I have done that and that's been so effective. And it can turn into, referrals. It can also show you glitches and issues you wouldn't have otherwise, known or seen, or if you would have, it would have been in a very public way before you could really make those changes and fixes. So I think it's realizing that your first version is rarely your best version. And people, I think, like to be a part of an early stage thing. I mean, it's even if you look at how Clubhouse has done, their invite only launch, that's obviously strategic. And a lot of companies are doing things like this. I think if you use it the right way, that can be the best form of building an audience, getting user feedback, and then pivoting into the marketing that will work. But just to go straight out from building my product to running ads or whatever you think is the best form of marketing, I think people find or will find some lackluster results and a pretty significant money pit, especially if it's their first time. And if they think something like, throw up some ads and that'll just generate hundreds or thousands of sales, because that is such a common fallacy that I hear. And I hear it from all entrepreneurs, people who've worked in business for 20 plus years and people who are like teens who, just have a really cool product or idea. And the hardest thing about business, in my opinion, which may be also almost the most underrated thing, is marketing. It's customer acquisition. Because building a product, that's really awesome. If you can't get in front of the right people, if you can't convert them, it's not that meaningful, especially to investors.
Right. Well, it sounds like managing your customers' expectations through use of the label alpha or beta is sort of a great way to make people sort of be more forgiving if it's not your best product yet. So
exactly.
That's great advice. And of course, marketing and product dovetails so well together, because if the product's not ready, doesn't matter how much money you throw at it, it's not going to stick, right? Because people are not going to enjoy the product and use it. You won't get any kind of a viral sharing there as well. So great points. Thanks for that. Another question I've got that may be different in the startup world that you live in versus the clients that we've got, who are most typically established businesses, but half a dozen startups as well, which is this decision between when your marketing budget becomes available between paid media and earned media, right? So early on, the as you said, the impulse is to just start turning on the paid media faucets and sort of see what your CPA is and see if you're meeting your unit economic targets, right, or not. But earned media, PR, digital PR, content marketing, all of those things should probably be going in tandem. So, given a budget, do you have a framework that you find works well for deciding sort of how much of that budget to invest in paid media for user acquisition or customer acquisition versus earned media for all the various genre of earned media?
Yeah, I think it depends on a lot of things. It really depends on your customer lifetime value and just what is an acceptable or appropriate customer acquisition cost. Because if you're selling, a $20 product, good luck with, any type of ads it's just true, right? Getting a profitable return if that's your only product. If you have a decent funnel and a value ladder that, goes up to a few $100s or a few thousand, you can make that work even if you lose money on the first sale. And that is unfortunately the model that a lot of advertisers are expected to move towards. And if you hire an ad team, that's what they'll tell you as a business owner, like profit is made on the back end, not the front end, which is fine. But what if your product really is, a lower dollar product? So I think, and I know for a fact, it's not necessary to sell a product that has a $500 or $1,000 customer lifetime value to be very successful. I mean, if you look at something like Scrub Daddy from Shark Tank, that's like a sponge, right? That should never have been as successful as it is, but it is. And I think it's determining upfront what is an acceptable customer acquisition cost. And you're not going to know it. You're not going to know what to expect when you first start running ads. I think earned media is great, but I personally wouldn't rely on it so much for lead generation. I would rely on it more for credibility. So I think it helps convert, but I don't necessarily think, like, if you get, a front page feature in Forbes, but your audience doesn't read Forbes. Like, I know Forbes is a huge publication, but it doesn't guarantee that the people you want to buy your product are going to read your Forbes feature or even care. And that is shocking to people. And that's, I think, somehow where the PR industry gets a little bit misunderstood, because if you're in PR, you're thinking like, I'm going to get you visibility. We're going to, get you credibility. But entrepreneurs and people who hire PR agencies, I think sometimes believe, oh, perfect. Like, I'll get a feature and then I'll get, hundreds or thousands or tens of thousands of leads and sales. And I've talked with enough companies who've used big PR firms and who've gotten great visibility. And whether we're talking like Oprah or Forbes or Yahoo Finance or, any of them, it can work for some companies. Typically, it's not going to be an ongoing source of, evergreen leads. It's just not. And even a show like Shark Tank, I have a good friend and former client who was on that show, and it definitely did blow up his business for a few weeks beyond the virality they already had from some BuzzFeed features and, things of that nature. But it ended up trickling off. And yeah, when they rerun his episode, like he can see a spike in sales. That's not sustainable. I mean, for him, if he was at $100,000 a month in sales, and then Shark Tank spiked that, let's just say 5x, it might be 5x for a month, but it's not going to continue like that. So I think earned media is really, really important for credibility, for social proof, and to improve conversions. But at the end of the day, lead generation, that's just something that you have to figure out. And that might be paid. It might not. It might be presenting at some expo. I have quite a few friends who are business owners in the pet space. And there are some pet expos for both B2B and B2C types of businesses that do really, really well. But you have to find wherever that is. And that's harder for some businesses than for others.
Yeah, I agree 100%. Often what we end up recommending to folks who have sort of zero visibility with regards to sort of reputation management or social proof is to just do enough digital PR initially to make sure that if a person gets curious after seeing an ad and starts looking up your company name, that at least the SERP is filled with generally positive things that support your value proposition, right? So that doesn't require necessarily a front page cover of Forbes or Fortune or the Wall Street Journal. It can be industry trade publications or a bunch of things that are more attainable. So I agree with you there. It's sort of a support, and it tends to increase conversion rates when you have a lot of positive buzz out there and people see it when they get curious about your brand. Another thing that sort of is different, typically East Coast to West Coast, but it's actually more sort of VC specific, is some VCs are looking for very strong demonstration of unit economics, right? So they're basically saying, oh, what's the use of funds? Oh, I get it. LTV is, $276 on average. And so, if I give you 3 million, here's what you're going to do with it. And other VCs are more like, oh, let's just get big fast, and then we'll figure out our unit economics. And so, when you're advising folks who are sort of in some phase of launch, and they may be not that far away from having unit economics, but at the same time, they're sort of tempted to go out there and sort of maybe pitch one of the more speculative VCs that's just going to look for growth, user growth, as opposed to, the unit economics. Have you any tips for those folks?
Yeah, I mean, I think it's super industry dependent. So I don't think one or the other is necessarily right. I mean, from someone raising funds, it might seem preferable if they don't care as much about unit economics. But I really think it just depends on your longer term monetization strategy. And there is immense value in data. And if you are cultivating an amazing database of targeted users, there's value on the back end there, whether that is selling that data, whether it's selling them, a variety of products. I think that's how you see media companies commanding, valuations that just are astronomical in comparison to what they've ever sold, which is probably nothing, right? If they're just generating subscribers, like Morning Brew, right? They just sold for $75 million. They started off with a newsletter. So I think the value in the data is worth overlooking things like unit economics if that's your long-term play. And I think that's probably what venture capitalists are thinking. And then there's also the thought of just, you might become the next, unicorn, whatever. Somehow, one day we'll find how to make it profitable. Not today, not 10 years from now, someday. So like if you looked at, Snapchat when they IPO'd, similar deal. And obviously investors got behind that idea. Coming from more like the finance side of it, don't quite agree with that approach. I think you need to be specific in what you're expecting in terms of monetization, or at least how you're going to do it. I don't believe in just build it and they'll come and then one day we'll figure out how to make money off it. And I'm working with entrepreneurs right now who are adamant about that, some in the media space. And I believe there is a great way to do even like free products, free apps, services that are more going to be like an advertising revenue play or something like that. I think there's a way to do that. But you can't just go in and assuming the bigger, the better, because that's not really true. I actually think the more data, the better, the more targeted, the better. I think those are the two things that make unit economics maybe less important or something you can push off for later. And I also think realizing, unit economics at the beginning of a company are probably a little bit different from what they are later on, just because you are still building that credibility, and things like customer acquisition costs hopefully are going to, decline. That's the hope. So I think that there is always a weird like wiggle room at the beginning when you're just figuring out what you're building and how you're converting. But yeah, I don't think that there's a right or wrong approach. I think it's about what is the investor looking at and what are you looking at. And personally, I prefer to think more with the financial mind of, let's assume we're not going to get an investor who doesn't care about making a profit. I mean, it can happen. That's not the strategy I would suggest.
Great. Well, my investments, I always look for unit economics when I do my angel investing. Not that I'm particularly good at it, but one common theme I saw across your LinkedIn and some of your other writing is you seem to be a big fan of email, and sort of every year for the last 10 years, people have been saying email is dead, but yet there are a ton of marketers just really hitting it out of the park, using email as one of their sort of foundations. So, how do you go through the process of deciding, what's the email strategy and for your consulting clients or for businesses you're involved in? Obviously, email is not dead because we have a lot of evidence of that, but it may not be perfect for every startup either to use email.
So I definitely agree. Email is not dead. I have financial proof that email is not dead, and it's a pretty significant ROI. The ROI I have seen from email marketing is, it just blows everything else out of the water. It's not even comparable, but that's for so many reasons. So when you are doing paid advertising, it's kind of like a one-time shot. You spend money that day and maybe you generate some leads, maybe you generate some sales. And sure, if you're pixeling things properly, you're building a lookalike audience and you can remarket to that. So you could say that there's ongoing value there, but it's not free because you have to keep spending money, versus with email, you don't. You might spend money initially to acquire the email and whatever money your, CRM or email service provider costs on a monthly basis just to keep it going. But you're probably not going to have to spend anywhere near as much to keep sending out emails and marketing to these people as you would just through paid ads. I know for me, at least, that is the case. And I would really suggest it for most businesses. I can't think of a business where it wouldn't work. I know a lot of businesses that don't believe it can work, and so they don't even try it. And sometimes I have entrepreneurs who approach me and say, hey, I have a really good email sequence. Like I have this all set up. I just want your help with, one small piece of the puzzle. And then I look at their emails and it's just, it's a mess because they treat email like either a newsletter, like sometimes it actually is just a newsletter is how they use it, or they just send people to blogs, or they're just selling all the time. And the truth is, with my companies, when we use email marketing, we actually do sell all the time. We don't really do much of just like giving value. That's just because of the nature of the companies that I run. It's not because that's a strategy. I have another company that's like in stealth mode that we're going to be doing email in a different way, and it will be less like sales focused. But I still think if you're trying to sell things, you can have every single email that you send out be a sales email, but it shouldn't read like it shouldn't read like a sales email. And that's the problem. I've seen emails that aren't even selling that are just so salesy. I'm like, I would unsubscribe personally. I don't unsubscribe. I'm subscribed to so many email lists just because for the research of it, I like to see like what are other companies doing. I have, oh my gosh, tens of thousands of emails that I should read through that, offer value. I know they do. So I think email is great if you use it in a way where your email is going to be a welcome addition to their inbox. And that means being hyper specific. Like you need to talk to the person more like you would in a text, in my opinion, or like not casual like a text, but personal like a text. I don't think it should read as if they're one of 10,000 or 100,000 people. Like one of my companies has sent over 38 million emails in the last year and a half. And when you get our email, if you're on our list, you probably don't realize that email is going out to hundreds of thousands of other people. It's obvious that they don't realize that from their responses, and that's good. And that's the only way that we're able to, get the return that we get, because people feel like it's personal. I think email is totally undervalued and has a lot of potential.
One mistake I see a lot of folks make on the marketing side is when they build their funnel or they're trying to sort of gate something valuable to get that email address is, they don't make a strong enough case about why you should use your legit email as opposed to the one you use, which is your sort of fake one that you don't really read, right? Because obviously, if you've gated the content and now they got this ebook or they got this other valuable asset as a result of trading their email, if it's not the email they open regularly, it's their sort of spam email box. As a marketer, you're much less likely to be able to engage with the consumer. So, what's sort of the best practice that you've found with regards to sort of framing the call to action around that gated piece of content so that the people don't use their Hotmail that they check, once a month?
Yeah, that is actually a good question and really hard. It's not something that I've really ever actively addressed because I think with the products that my companies sell, people want them enough that they actually give us a good email. But I mean, you definitely make a good point. I look at things like deliverability rates, and that's the biggest problem with email marketing. But I don't usually assume that's because someone gave us a bad email or like their spam email. I actually usually blame the email provider and assume they're putting us into spam. And there are ways to get around that. It's like, are you doing a bunch of exclamations or things in all caps? Do you have like red, font in your email? How many links do you have? How long is it? And varying it up. You can even vary up the sender alias. You can even vary up the email, even if you're sending it from the same, provider. So I think there are a lot of ways to try to get around that getting caught in the spam boxes. But in order to get people to give you the right email, I think it's just showing how much value you do provide with that. So in one of my companies, we're providing enough value that people want to not just get on our email list, but like they want to talk to us, like they want to book calls. And I try to minimize that. Honestly, I don't appreciate sales calls. That sounds bad, but like years ago at the beginning of one of my companies, I remember like opening my calendar for like 8 hours a day thinking, oh, anytime and it was probably just the worst thing I could have done because you get people who pick up the phone and they're like, who are you? It's like you booked the phone call. So I think making people realize your time or your company's time is valuable. If they're going to actually make the effort to engage, they need to realize that it's an investment on both parts. So maybe that's the thing. We just don't offer frivolous products or sell in a frivolous way where it's like, just download this later. And you know what? I think you're right, actually, because I have a different company where we did a lot of that. We just had a ton of different lead magnets that people would opt into on social media. And yeah, the emails we got, it wasn't even the emails that we got that were not great. The quality of lead was not great. And that I almost think like, good, we don't want those people on our list. So if their email bounces and we need to remove them, at some point it does come down to who do you want to market to?
Right. Great point. Another area you seem pretty active in is the influencer marketing category, which has certainly some good and some bad in it. Obviously with fake followers and illegitimate influencers, that's a big concern to marketers. But it also lets you reach difficult to reach audiences where they run ad blockers 100% of the time and they don't respond to traditional paid channels. So even if an influencer was a paid placement, right, it is a way to break through the clutter. So for marketers who are sort of on the fence around, should I use influencer marketing? Let's say it's a consumer-facing product. Are there any best practices to determine legitimacy and maybe dip your toe in the water before you jump right in?
Yeah. So this should be an entire discipline where if you're going into marketing, you have to take a class on it or something because it's so easy to waste a ton of money. And unfortunately, I don't think the incentives are completely aligned from everyone's point of view. So as a business owner and or marketer, you think that your incentives are aligned with the influencer and their manager. But in my experience, that's just not always the case. And I think companies are noticing more what is a bubble and what maybe doesn't convert. And some influencers are noticing this too, which is really great if they're willing to be transparent. I think influencer marketing can work very well for certain industries. And I think for other industries, it's just honestly a waste. And then I think that there's some in between where, it's probably not going to convert like crazy, but it's worth it for visibility, but you're not going to pay, a ton of money on it. So in my experience, we have worked with influencers for my companies, and some of my clients have worked with influencers. I have clients in the pet space who do amazing with influencers. They do better with influencers than they do with paid ads, with pretty much anything else other than maybe for some of them SEO. That happens to work for like one or two outliers just based on their niche within the pet space. So that can work. But I also think the power of influencers, it's declining in a way because there are so many of them. And when everyone's an influencer, no one's an influencer, So it comes down to figuring out, is the engagement real? Does that engagement translate to sales? And the best way to make everyone's incentives aligned would be a revenue split, right? Like a revenue share. So rather than paying someone upfront for value they might not provide, I personally am more a proponent of some type of revenue split model. And I think when an influencer or their manager does not want to do that, it's very, very telling. A few years ago was negotiating a contract, and it was an influencer represented by like a Hollywood A-list talent agency. And we wanted to do a revenue split, very favorable for them, as well as an upfront, like a signing bonus. And their manager just wanted $100,000 upfront, no revenue split. And I could see this influencer's, he had like over 9 million followers across platforms, which is obviously sizable, but the engagement was just waning. And there was just no proof or reason for me to be confident that it was going to convert to the tune of a few $100,000. And if we're going to pay you $100,000, someone's got to make something here, right? Or else what are we doing? And that was just a good example of what not to do. So we did not do that deal. But I've also heard in the influencer market, the influencers themselves taking a different approach, which is more visibility marketing and believing I've spent years building this audience. So therefore you're paying just for the visibility, just like a company would pay for a television ad, just, to get seen, to get known. And I think that's true. If you're a giant company with an unlimited marketing budget and you don't really care about, generating profitable leads right now, go ahead, do that. If you're a startup, if you're a smaller company, if your budget matters more and you really need a return, I don't believe in spending money like that. So I think the incentives have to be aligned. I think revenue splits are the best, and targeted micro influencers with high engagement are probably the best option. But, at the end of the day, it's a little bit of a gamble. Probably wouldn't spend, $50,000 per experiment on that. Maybe start with like 5,000, see how that goes, and then, work your way in.
Yeah, absolutely. Some really great points there. I sort of think about influencers as their own little publishers, right? And just the same way you would have a conversation with a publisher differently if you were doing upper funnel versus lower funnel marketing, you should do the same thing with the influencers. Because in some cases, if you have a high consideration product, and not a good funnel, maybe upper funnel visibility is all you can expect as a KPI as the marketer, right? And so it's be unfair for you to force the influencer to act like an affiliate and just get sort of last click attribution when you're selling washing machines or something like that.
Definitely.
But so I think it really is interesting that if you sort of can have the conversation with the influencer and sort of align based on the KPIs that you would use with a publisher conversation, it's sort of, you can more often come to a solution. In the same way, hybrid, I like the idea of sort of the signing bonus plus a back end, right? Because then you leave them upside. I've seen some deals where they made way more on the back end than they would have asked for up front, right? Just because they actually had an engaged audience and the offer was pre-vetted and pre-proven to work, right? So it worked in everybody's benefit.
Yeah, one thing I would add to that though is I know like the beauty space is one. I don't have any businesses in that space, but I do know entrepreneurs in that space and marketers, and they historically have done decently with influencers. However, now there's definitely a move where influencers are proudly stating, well, when a beauty company, does a $50,000 deal, they know they're not going to make $50,000, but they're excited to even have their product on my channel. And I think that's where like there's just someone's missing the boat. Things are not aligned. And, it's fine if you want to be an influencer. That's a great way to sell yourself. If you're the company, you just need to be a little more thoughtful. Just because someone has followers, just because someone's followers like them, maybe buy their own products, doesn't mean they're going to buy your products, because it's very, very different. When it's a product from the influencer, I think that actually has a lot more clout with their audience. And I think that they have a much higher conversion selling that versus some random company that it's obvious to everyone, this is just a sponsored deal.
Yeah, I think authenticity is key in influencer marketing. So is there anything sort of coming up in the next or launching currently that you're super excited about for the next year? Maybe new shiny objects that you think have some potential, but it's too early to tell?
Yes. I can't talk much about them, but I have one stealth startup, I will call it, that hopefully will solve a lot of the problems we just talked about, and will eliminate the need for traditional PR, eliminate the need for traditional ads, and really utilize the value of organic audiences and media in a way that's better for both consumers and just like, media consumers, people who like to read, who like to learn, as well as for companies who don't want to waste money on, press that doesn't convert or on any type of marketing that doesn't really generate a return. So I'm working on a product that's a kind of cool combination in the media space that kind of does a little bit of that, but it's probably 6 to 12 months out from launch, but definitely trying to solve those problems.
All right. Well, we'll definitely have to do another interview then when you launch.
For sure.
Thanks so much for joining me. It's been a pleasure chatting.
Thank you so much. You too, Kevin.